It's that time of the year again, time to pay Uncle Sam, which leads me to my next topic. What's the deal with tax credits versus tax deductions? In this video, I'm going to specifically reference Arizona tax credits and talk about the differences between tax credits and tax deductions. If you live in Arizona and pay taxes to the Arizona state government, then you are eligible for something called a tax credit. Most people understand what tax deductions are. I'm here to break it down for you today. If you're someone with a job and you have income, then you are going to be subject to pay taxes to the state of Arizona. You may not think that you pay taxes, but as long as you're making minimum wage or higher, you are definitely paying taxes to our state government. When you get paid out of your paycheck, they're probably already taking this out. If you take a look at your paycheck stub, you'll see that there's even a little line for Arizona state taxes. That tells you how much you've already paid in. When you pay this money into the Arizona state tax bucket, if you will, then they distribute the money to all these other organizations. However, the state of Arizona has something called a tax credit. The tax credits actually can be where instead of putting your money into the Arizona state tax bucket, you can actually put that money into other organizations. These tax credits allow you to, instead of paying money into the Arizona state tax bucket, you can redirect this money down here into these other buckets. There's a foster care tax credit, there's a charitable organization tax credit, there's a private schools tax credit, and there's a public schools tax credit. All of these tax credits allow you to take your state tax dollars and distribute them into these buckets or just one bucket if you would like. The cool thing about this is you don't have to pick just one bucket. So for instance, I and my husband decide to put money in the foster care bucket, the charitable organization bucket, the private schools bucket, and the public schools bucket. You can put money in all four. Here's the catch. You have to look at how much you actually owe your part in the state tax bucket in order to decide how much you're going to put in. There are limits for each bucket as well. You're going to want to check those based on the year. Most of the limits for these buckets stay relatively the same year to year. The one that changes the most that I've found is the private schools tax credit bucket. These are called the private school tuition credit. This year for 2021, people that file as married can do a tax credit up to $2,435, and people that file single can do a tax credit up to $1,219. Again, that's just for the private school tax credit. The public school tax credit stays about the same, $400 if you're married, $200 if you're filing single. Charitable and foster care does change just a little bit year to year. Foster care usually it's about $1,000. All right, let's run through a scenario so we can know the difference between a tax credit versus a tax deduction. Let's take an example scenario. Let's say that you're filing married and your income is $75,000 per year. And let's say you owe about $3,000 in Arizona state taxes. Again, this number is going to fluctuate depending on a lot of different things. You're going to want to reach out to the person that prepares your taxes and look to see how much tax liability you actually have. When I'm thinking about a tax deduction, right? Let's say that I find my favorite charitable organization and I give them $5,000 for the whole year, assuming this is not an organization that falls under the charitable tax credit bucket. So I write off this $5,000, and when I write it off, it actually reduces my income. So instead of paying taxes on $75,000, I actually made that $5,000 donation to a charitable organization. So now I'm going to pay taxes on $70,000. Now, this number right here is going to go down slightly, but not much, because I really only adjusted my income $5,000. Maybe it goes down $500, right? Notice that it's not a direct correlation. In other words, I don't get to pay $5,000 and donate it to my favorite charity, and then now instead of owing $3,000, I actually get a refund of $2,000. That's not what happens with tax deductions. Tax deductions reduce my income. Now let's look at tax credits. Okay, still using my same scenario, $75,000, filing married. I owe $3,000 in Arizona state taxes. And if you're like, Marcia, I never owe money though at the end of the year, it's probably because it's being taken out of your paycheck every single time. So you're really not ever sending a check to the Arizona state government. It's just getting slowly taken out over all of your paychecks. At the end of the year, maybe you owe nothing, or it looks like you owe nothing, or maybe even you paid too much in and you get a refund. If you have a job, you are definitely paying taxes. Check your W-2, I promise that. A tax credit, you can literally say, instead of paying the Arizona state government $3,000, so I want to do the full private school tax credit, which this year would be $2,435. You can see that now instead of paying the government $3,000, notice that I now only pay $565. Now let's say I'm like, well, I'd also like to do the foster care tax credit. I think you can do up to $1,000. So I could take this $565, again, pay it to the foster care organization of my choice that is one of the approved ones for the tax credit, and now you will see I actually don't end up paying the government anything. Now you might be thinking, wait a minute, if I am paying all of my state taxes to other places besides the state government, then what happens? Like, who's paying the rest? Well, not everybody takes advantage of tax credits. However, this is a great way that you can redirect your tax credits totally approved by the state government of Arizona to these other different buckets if you would like. Now, let's say you're one of those people that owes nothing at the end of the year. Then what happens? If you've already had this $3,000 taken out of your paychecks, what you can do is the exact same thing. So as long as it's done before you file your taxes on April 15th of the following year. So let's say we're doing this for 2021, I could actually pay my $2,435 and my $565 on April 14th before I file if I want to do that. And then what's going to happen is this money is coming back to me. So now I'll get a refund check of $3,000 to basically reimburse me for paying for these two buckets of money that I redirected my state taxes to. Now you might be thinking, okay, this is great, but what if I don't owe that much taxes? I looked at my W-2, maybe I'm retired, then what can I do? Let me give you another scenario. So now we've got a lesser income, so therefore we owe less taxes to the government. Well, you're like, well, I really still want to give to all these buckets. You actually could. So let's say you're like, well, I only owe $1,000 this year, but I really want to give to the private school tax credit. And let's say this person is single, so they want to do the max contribution of $1,219. Okay, well, already you can see, wait a second, I'm over the money that I would have paid into the state. Now what's going to happen is the state is going to use this as a tax credit for the next season. So for 2022, you're going into it already with the state of Arizona owing you this $219 as a tax credit. This actually stays for up to 5 years. So if you accidentally overpay, you would have that credit going forward. I'll tell you what we do is we just wait to decide our amounts until we file our taxes. That's the easiest way to do it. And that way you really don't even have to come out of pocket for more than a week or two until you wait for your tax refund check to come in the mail or hit your account. Again, the biggest difference I want to highlight is a tax credit affects actually how much money you owe the state of Arizona versus a tax deduction affects what the amount of income is that you're going to be taxed on. I hope you now have a better idea of the difference between a tax credit versus a tax deduction, and you feel empowered to redirect some of your tax credit money if you so choose.